I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Shedlock, editor of Mish's Global Economic Trend Analysis on MishTalk.com. Welcome back to the show, Mish.
Pleasure to be on the show.
With all the things coming out of Donald Trump's Twitter account, some people have suggested to me he could be the black swan that could be the guy to tip over the stock market.
Well, who knows what it's going to take to trigger this. Trump's tweets have been certainly bizarre, and they sometimes get more bizarre by the day. He's managed to literally offend everybody. He's not managed to get much of his key agenda done, but so far he hasn't started a global trade war. We can say that yet.
He's dissolved his two advisory councils made up of company CEOs, basically because they'd already all left.
Well, I don't know. I mean, you know, and talk about personality disorders. What are we seeing at the Fed here? They've been preaching inflation is right around the corner, right around the corner, right around the corner, right around the corner for, going on 9 years now. Of course, they don't know how to measure it, which we've talked about this before. They don't count asset bubbles, bond bubbles, junk bond bubbles, reblowing of the housing bubble, any of that is part of their inflation measures, but you know, they're saying today again, well, you know, maybe it's going to take a little bit longer to hit our inflation targets. Meanwhile, they've been using the word transitory for at least a couple of years, and if you go back, it's really been 9 years since they've last managed to go over their 2% inflation target.
Retail sales down for everybody except apparently for Target, which had not a bad quarter. And again, another Trump tweet today. Amazon is doing great damage to tax-paying retailers. When was the last time Donald Trump paid tax?
Well, that's a good question. But actually, I think Amazon is doing a good job for consumers. I would say the same thing about Walmart. I would say the same thing about any discounters. People need cheaper prices, so they shop to these places. The Fed thinks we need higher prices, but the people say we don't. So who's right here? Nearly every article, you know, this person, whoever, or computer or robot, or I call him a Keynesian parrot that writes the column for Bloomberg Econo Day, is talking about, you know, the need for more inflation. I mean, people clearly don't want it. They're doing everything they can to avoid it, while the Fed is doing everything they can to give it, and the result has just been a series of asset bubbles.
Is deflation a bad thing?
Well, again, we've discussed this. Inflation is theft, actually. That's the best way to look at it. Purposeful inflation caused by the Fed, caused by printing money, caused by QE. That's theft. It robs people of their savings, and so do negative interest rates and everything else. But that's what central banks have done. They're going to get outright deflation, outright price deflation, when these asset bubbles pop.
How soon do you think that'll happen?
I don't know. It's taken a lot longer, Jim, than certainly I ever expected here. As long as they can keep the stock market afloat, or as long as the stock market stays afloat, better way of putting it, the consumers might keep up their spending. We saw yesterday a retail spending report. Spending was up across the board, almost everything but apparel and electronics. Of course, the report itself was highly suspect. It says that auto sales were up not only in July but also in June, and that just defies all logic and everything that the automakers, Ford, GM, are reporting. For the BLS to say that auto sales are up, one has to then question the entire report. What are they looking at here? Because it's not what the auto manufacturers are reporting at all.
And don't we usually get an annual retail bump here as parents buy school supplies?
Actually, we do, and there's some people questioning whether or not there was a little bit timing difference in this from last year, and that consumer, back-to-school purchases influenced some of these numbers. That's possible, but I don't think back-to-school influenced automobiles. So there's still some aspects of the reports, even if you blame it on, differently timed seasonal adjustments that just don't hold true for automobiles.
We'll have more with Mike Shedlock right after the break.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Welcome back. We're speaking with Mike Shedlock. Mish, Japan expects 4% growth this year, but is it mostly because the Japanese central bank has been snapping up all the stocks in the 50 biggest companies in that country?
Well, I don't know. The Swiss National Bank is one of the larger holders of the S&P 500. So I mean, the whole thing is crazy. If I would have proposed this, if I would have written an article 10 years ago predicting that this would happen, everyone would have thought that I was crazy. I would have thought I was crazy to even be writing this. Yet here we are. And one wonders, of course, the Fed now, they've announced, that they're going to start reducing their asset sheet. The ECB has made no such adjustment here. But the ECB is actually running out of bonds, particularly German bonds, to buy, so they're starting to corner that because supposedly they have to buy these by regulation they have to buy these in a weighted basis, so they have to buy more German bonds than Spanish bonds. But anyway, here in the U.S., the Fed wants to unwind its balance sheet. But if a recession hits before they do, or shortly after they do, they will quickly stop that. I think, one of the reasons behind the rise in gold here lately is realization that the Fed is not going to be unwinding its balance sheet as fast as they claim, not going to be hiking as fast as they claim. And that should provide an upward lift here on gold, simply on the basis that it's a suggestion that the Fed is no longer in control of the situation.
Has the U.S. dollar bottomed?
I don't know, and bottom versus what. I highly doubt it's bottom versus gold. Versus the yen versus the pound, I don't know, because one of the problems is we don't know what these other central banks are going to do and when, or how crazy things are going to get. Right now there's an expectation here that the ECB is going to at some point start, tapering at least its purchases. If the ECB does do that, that might add a little bit more strength to the euro. If it doesn't, then you have a case of the euro, of expectations in the euro not being met, and expectations by the Fed not being met. Which one of those will take the bigger precedence? I don't know. But clearly we're running to the limits of what Fed policy can do. So it'll be interesting to see how the stock market reacts to all of this, either when the Fed does finally start reducing its assets balance, or alternatively doesn't. I think that point is coming up. They want to start this by the end of the year, and so one way or another we're going to find out what the market does if they do start tapering, or what the market does if they don't. That's coming up. In the meanwhile, we're just all speculating on how the market's going to react to these things.
We'll have more with Mike Shedlock right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Mike Shedlock. Mish, how concerned are you that the U.S. probably won't have a budget by the time it has to vote on extending the debt ceiling?
I'm not concerned about that at all. Republicans are going to cave just like they did the last two times. Even the sequester, they put all these great theatrics in play about not going to hike the ceiling when Obama was president. I don't, and they're not going to try that tactic again because it didn't do them any good. So they're going to huff and puff, and eventually they're going to come to some sort of agreement to hike the ceiling. So now that they're in control of both houses of Congress and the presidency, we've gotten actually very little legislation passed. They passed Obamacare repeal countless numbers of times in the House when Obama was president. Nada here in the Senate when when they're actually in control and can do something about it. So I think it's all just a bunch of hot air when push comes to shove. If there's a market reaction, and eventually there will be one, if they don't pass the budget ceiling hike, when the market reacts, they'll get together and do it without any cuts in spending, probably.
India has banned gold exports. Why would they do that?
Well, really what they want to do is crack down on the gold trade, period, and banning exports is a way to do it. The Indian government claims that people are importing gold and then exporting it again and not adding any value to anything, and that's in violation of their import tax of a 10% tax on gold. Of course, why would they have an import tax of 10% on gold in the first place? other than to discourage trade in gold. But India has free trade agreements with a number of countries, so they're skirting the 10% ban or 10% tax on gold that way. So India said, okay, well, we're just going to have a 10% tax on, or we're just going to prevent, not by taxation, we're just going to not allow any exports of gold unless there's a reason for it. Of course, there's not going to be a reason that the government is going to accept. So essentially, it's just a crackdown on gold. The Indian government clearly does not want people to own gold. That's another reason whenever government doesn't want you to, do something like this, you probably should. It'd probably be a good idea to have some gold in your portfolio.
And just how much gold should the common guy have?
I addressed a post on that, and it depends. You certainly don't want to have any more than you can sleep with, and people's tolerances vary. Anywhere from 10%, all the way up to 30% might be reasonable, and for some people who absolutely can't stand paper, perhaps even more. But if someone is going to worry about price fluctuations in gold, they probably ought not be in it. And I said the same thing that applies to the stock market. If a 10% drop in the market is going to cause you a lot of stress, you probably ought not be in the market either.
GM is testing a fleet of robo-car taxis in San Francisco. Will driverless cars actually meet the timelines made by manufacturers?
It's going to be close, probably. One of the key things missing here is actually regulation from Congress, from the Department of Transportation that allows this. But I think we'll see that in time. Ford's timeline is 2020. GM doesn't have one. There's rumored to possibly be in place by next year. Probably won't make that. It's probably just a rumor. But so many of these car companies have targets in the 2021 time frame for me to tell me. I highly doubt that they're all going to miss. So the question then is how widespread the adoption. It'll happen almost instantaneously, I think, in trucks on highways. The moment self-driving trucks can happen on the highway, we're going to see a mass transition to that within a year or so. So very, very quickly, car rollout, even after they allow this, will be much, much slower. But even there, we're going to see it. It'll start with taxis, limos, aging boomers who have trouble seeing at night, and millennials who just really don't want to have much to do with cars at all, period. They would rather be doing other things. So I think the millennials and aging boomers will be the first consumers to adopt, and people like me who like to speed will be the last. But eventually it'll be forced on everyone, if for no other reason. The insurance costs for insisting on driving your own car are probably going to go up, and they'll fall for everyone else.
Right, and one of the issues I have to look at is what about drunk driving? If you get into your self-driving car, are you really in care and control of it and could be charged because you plan to sit in the back seat and sleep it off?
Those laws will all have to be looked at. I don't know what they're going to come up with there. There's some safety concerns, especially that parents are going to have with kids being in the car, by themselves or getting into a car by themselves. What might happen there. So we're going to see some services spring up to address some of these things. But certainly if you hail a Uber, and right now you can be in an Uber with someone else driving and drunk, and if you hail a self-driving Uber, it's probably not going to let you take over control of the wheel. You're probably going to have to have someone program in where you're going to go. So the laws are going to have to address all this, and they will. And but they've got just a 2.5 years, to do so, 3 years or so to do so. But I think those things are coming.
Is the real trend when it comes to high tech, it all happens faster than you think it will?
Yeah, I think so, especially here in with the case of automated trucks. I think cars are going to be slower. But even something like the internet, when it first came out, people looked at it and, trying to figure out, what does this do? How does this work? Everyone remembers your first internet search, struggling to find literally anything. But 5 years later, it is widespread adoption, and then 10 years later, it was a had-to-have kind of item. So we're going to see something like that happen here with cars over the period of the next 10 years.
Will the self-driving car mean the end of car dealerships as we know them?
I think so. Eventually that's going to happen. The end of insurance as we know it, auto insurance as we know it, the end of a lot of things as we know it. It's hard to predict the timeline for all of these things, but that's pretty much baked in the book, and it's all going to start here with first with trucks, then with taxis, and then a slower adoption over the next 10 years. But by the end of the next decade, we're going to get there.
Will people be reluctant to take that robo-taxi? And I just look at the experience here in Vancouver with the subway elevated train system. It's been run by robots since 1986.
Yeah, I think you're going to see reluctance from some people, but eventually they're not going to have a choice. You're going to go to the airport. You're going to need to catch a limo to your hotel. And the thing's going to be self-driving. If you want to take a taxi and pay a driver, for a while you'll be able to do that. And then after a while, maybe you won't. So, but the costs alone, for that driver car versus the undriver car are going to be a lot higher. So someone's going to have to say, I'm so fearful that I'm willing to pay 3 times as much for this cab ride, or twice as much, or whatever it is for this cab ride, than taking a self-driving cab. Eventually people are just going to come over their fears. Their friends are going to say, well, I took one. It was a nice ride. I didn't have to worry about anything. So, all that. There'll be a lot of pressure in a lot of ways. Sure, there'll be some holdouts. People saying, well, I'm not going to do this or I'm not going to do that. Well, when push comes to shove, they are going to do that because eventually there's not going to be another option.
Mike, thank you so much for chatting with us.
Pleasure to be on the show, Jim.
My guest has been Mish Shedlock, editor of Mish's Global Economic Trend Analysis on mishtalk.com. If you have any questions for the show or our guests, you can email them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.